The market just lost $5 trillion in value. Most people see that and panic. I see that and look for what to buy, because every time the market crashes, it hands a wealth transfer to whoever's paying attention. You don't need to be smart. You don't need to be first. You just need not to be dumb. And most people are dumb. They sell when things are cheap and buy when they're expensive. That's why most people stay broke. My voice is shot, I'm fighting a cold, doesn't matter. The market doesn't care if I'm sick, and neither does your portfolio. I'm still here because what's happening right now is too big to ignore. Tariffs didn't break the market, they exposed it. And that exposure is how smart investors get rich, fast. Because while the crowd is focused on losses, the smart money is focused on positions. This video is simple. I'm going to show you how I'm playing this crash, what I'm looking at buying, why I'm buying it, and how you can position yourself to come out of this a winner. No fluff, no music, no charts you don't understand, just results. If you're here for the truth, stay. Let's get into it. Tariffs didn't surprise the market because they happened. They surprised the market because of how they were structured. Everyone expected politics. No one expected a mathematical weapon. Here's what actually happened. Trump rolled out a system of tariffs based on a made-up formula. It had nothing to do with matching other countries. It was just the trade deficit divided by total imports. That's it. Which means countries that weren't even hurting us still got hit, including countries where we have a surplus. Why? Because this wasn't about trade. It was about leverage. These tariffs aren't strategic. They're aggressive, maybe even reckless. Will they work? Maybe. Will they backfire? Also maybe. Doesn't matter. What matters is the market doesn't like unknowns. Investors didn't sell off because of numbers. They sold off because the rules feel unstable. And instability creates one thing: discounts. When the market doesn't know what's next, it overreacts. And overreactions are where the money is made. You have to stop thinking like the average investor. They see red and run. I see red and ask, what does this make cheap? Because value doesn't disappear, it gets misplaced. And your job is to pick it up while it's on the floor. This crash isn't a tragedy, it's a filter. Weak businesses are getting flushed. Strong ones are on sale. And that's exactly what we want. Now that you understand the game, let's talk about who's playing to win. When the rules change, most businesses lose, but not all of them. In every market crisis, there are companies that benefit from the chaos. And the trade war is no different. So here's the filter I use. Does this company become more essential when the world breaks? If the answer is yes, I pay attention, because tariffs don't hurt everyone equally. They hit weak supply chains. They hit companies that rely on cheap overseas labor. They hit exporters with razor-thin margins. But they don't touch companies that governments need to function. Those companies don't get squeezed, they get funded. Let's talk specifics. Defense, funded. Data security, funded. Domestic chip production, funded. That's where the capital flows in a trade war. Not because investors like the narrative, but because national survival depends on it. Countries don't care about your margins, they care about winning. And they'll write checks to anyone who helps them do that. If a company's product becomes more valuable when the economy is unstable, that's your edge. That's where you park long-term capital, because those aren't just businesses, they're infrastructure. They get protected, prioritized, and propped up. Don't get distracted by short-term headlines. Focus on who becomes more important in the new environment. The world is choosing sides, and the companies aligned with sovereignty, data control, and AI infrastructure are sitting at the grown-ups table. In this game, you don't need to pick winners. You just need to avoid losers and own what governments refuse to let die. Next, I'll show you exactly how I time my entries when fear is peaking. Everyone talks about buying when there's blood in the streets, but nobody tells you how to do it without blowing up your account. So here's how I buy during fear and why it works. Step 1, I track fear, not opinions, data. The CNN Fear and Greed Index is flashing extreme fear right now. That's your first clue. But I don't just fire off trades based on that alone. That's amateur hour. Step 2, I look at momentum, specifically my momentum dream indicator. It tells me if the market's pressure is reversing. Right now I'm watching for momentum to turn positive and hover near the zero line. That's when I know the market might be stabilizing, not based on feelings, but on data. This is the single biggest edge I have during volatile times. And if you want to see how I use it, you can try my TradingView indicators for free. Links in the description. No pitch, just tools that work if you know what you're doing. Step 3, I check the VIX. Volatility still high. When it spikes, I don't chase. But when it peaks and starts to drop, that's when the smart money starts moving in. This isn't about predicting the bottom, it's about stacking conditions in your favor. I wait for fear to peak, momentum to improve, and volatility to cool. That's the trifecta. That's when there is a green light to start buying, because hope isn't a strategy, math is. Now that you've got the system, let's talk about what stocks you want to buy or own and why I'm building positions in two of the most resilient companies in the market. Let me be clear, these first two, they aren't sexy stocks and they will never rocket higher. These are foundation stocks, the ones I buy so I can sleep at night while everything else burns. Walmart and Berkshire Hathaway. First, Walmart, ticker WMT. If tariffs stick, prices rise. If prices rise, consumers trade down. Guess who benefits? Walmart. They win in recessions, inflation, and downturns. Why? Because when people panic, they don't stop buying. They just get cheaper. And Walmart owns cheaper. Tariffs hurt luxury. They help discount giants with supply chain control. Walmart is built for economic pain. Second is Berkshire Hathaway. Warren Buffett's holding over $160 billion in cash. That's not caution, that's ammunition. Berkshire isn't trying to time the bottom. They wait, then buy cash-generating businesses for pennies on the dollar. You can copy that logic right now. Berkshire isn't flashy, but it's a fortress. When markets bleed, Berkshire buys. That's a model worth following. Here's the point. These two stocks won't double next week, but they also won't disappear next quarter. In a world where uncertainty is the constant, I want to anchor my portfolio with companies that print cash, manage risk, and don't rely on hype. I'm not swinging for the fences yet. I'm laying the concrete. Walmart and Berkshire Hathaway are the floor I build on top of. Next, we go from defense to offense. Let's talk about the strategic tech stock that thrives when governments start writing blank checks. Most people treat Palantir like a tech stock. It's not. It's a strategic weapon. And in a world where every government is panicking, that's where you want your money. Let's cut the noise. Palantir isn't selling ads, it's not shipping gadgets, it's selling digital control to the people with nukes and drones. That's not a business, that's a fortress. And when the world gets unstable, governments don't cut those checks, they increase them. This is why I'm buying. Palantir doesn't rely on China. No factories, no supply chain exposure. Tariffs, irrelevant. In fact, the more strained global relations get, the more valuable Palantir becomes. It's built for sovereign resilience, intelligence, surveillance, cybersecurity, logistics. Exactly the stuff world powers don't outsource. Their Foundry platform is picking up steam in the private sector, but that's bonus upside. The core value is in defense. U.S. Army, Space Force, intelligence agencies. You don't rip those out, you expand them, and Palantir is already inside. Yes, the stock dropped. Who cares? The fundamentals didn't change. Market psychology did, and that's your edge. You don't make money buying safe. You make money buying mispriced dominance. Palantir isn't a trade. It's a bet on a future where data decides who wins wars. That's not hype. That's where the checks are going. Next, I'll show you the other side of the digital battlefield because AI isn't optional anymore, and one company owns the chips everyone's fighting for. Most people look at NVIDIA and think it's a semiconductor company. That's a mistake. NVIDIA doesn't sell chips. It sells infrastructure for power. It's the arms dealer in the AI war, and everyone's buying. Let's break this down. AI isn't optional anymore. Governments want it, corporations need it, and NVIDIA builds the only hardware that makes real-time artificial intelligence possible at scale. The software, it's built on CUDA. The hardware, H100s. The supply chain, vertical. No one else comes close. Yes, they've got China exposure. Yes, there are export controls, but let me ask you this. Do you think the US government is going to slow down AI investment because of that? Or do you think they'll double down on domestic production? The CHIPS Act isn't politics, it's a survival mechanism, and NVIDIA is right in the middle of it. The stock dropped. I don't care. It's not a red flag. That's a reset. NVIDIA didn't lose market share. They didn't miss earnings. The market just got scared, which means one thing, discounted dominance. And dominance on sale is the best deal you'll ever get. I'm not trying to catch the bottom. I'm building a position in the only company that makes AI possible at scale. This isn't a trend, it's infrastructure, and infrastructure gets funded no matter what. So I've got Walmart and Berkshire Hathaway for defense, Palantir for intelligence, NVIDIA for the future. This is how you position to win when the game changes. Now, let's wrap this up and talk about what to do if you're serious about playing offense in this market. Here's the truth. Most people won't change how they invest. They'll watch the market, feel the fear, and stay stuck. And that's fine for them. But if you're watching this, I'm assuming you want to do it differently. What I've shared today is the exact playbook I'm using right now. I've positioned for downside protection and upside conviction. And when fear hits peak levels, I'm not reacting, I'm executing. If you want to see the trades I'm actually making in real time, that's what my Patreon is for. Daily breakdowns, my personal watch list, trade alerts, it's where I share everything I don't have time to break down on YouTube. And yes, you can try my TradingView indicators for free too. That link's in the description. Use them if they help, ignore them if they don't. Either way, the tools are there. Because in markets like this, you've got two options. You can wait, watch, and hope it works out, or you can build the systems and play to win. Both are choices, one of them compounds.